Hey everyone, welcome back to the Real Assets Arcade. Today we're talking about how you can start investing in 2025, even if you're a total beginner. Listen, I get it. Investing can seem like this big scary thing, especially with all the confusing and constant market news. But trust me, it doesn't have to be complicated. Whether you've got $100 or $10,000, this video is your roadmap to starting your investing journey the right way. We're breaking down everything into 6 simple steps so you can finally stop putting it off and start building real wealth. So grab a notebook, smash that like button for the YouTube algorithm, and let's dive right in. Alright, step number 1. And this is crucial, guys. We need to figure out your why. Why do you want to invest in the first place? Is it to retire early and travel the world? Maybe it's to buy your dream house, or maybe you just want to grow your money and achieve financial freedom. Seriously, take a second and actually write down your goals. Having a clear vision of what you're working towards is going to be the fuel that keeps you motivated when things get tough. Because trust me, there will be times when the market dips, and you'll be tempted to pull your money out. But if you have that why firmly planted in your mind, you'll stay focused on the long game. Think of it like this. You wouldn't just hop in your car and start driving without knowing where you're going, right? Investing is the same way. You need a destination, a financial roadmap, if you will. So get specific. Don't just say I want to retire early. How early? What age? What kind of lifestyle do you want in retirement? The more detailed you are, the better. And hey, it's okay if your goals change over time. Life happens. But having that initial clarity is what will get you started on the right path.
Okay, step 2. It's time to learn the basics. Look, I know all the financial jargon can feel overwhelming, but I promise you, it's not as complicated as they make it seem. Let's break down some key terms you need to know, starting with stocks. When you buy a stock, you're essentially buying a tiny piece of ownership in that company. So if the company does well, your investment grows in value. Next up, we got bonds. Think of bonds like IOUs. You're lending money to a company or even the government, and in exchange, they promise to pay you back with interest. Now, let's talk about index funds and ETFs, or exchange-traded funds. These are like baskets of different stocks or bonds, which helps you spread your risk. It's like having a little bit of everything instead of putting all your eggs in one basket. And of course, we can't forget about compound interest. This is the magic of earning interest on your interest. It's like a snowball effect that can seriously supercharge your wealth over time. Don't worry, I'm going to break down each of these concepts in detail in future videos. So if you haven't already, make sure to hit that subscribe button and turn on notifications so you don't miss out. Alright, now that you've got the basics down, step 3 is to choose your weapon, aka your investment platform. The good news is, in 2025, we've got tons of amazing options that make investing easier than ever. Some popular platforms that come to mind are insert popular platforms for your audience, but no matter which platform you choose, there are a few key things to look for. First off, you want to make sure they have low fees. Fees can eat into your returns over time, so the lower the better. Second, look for a platform with a user-friendly interface, especially if you're a beginner. You don't want to feel overwhelmed or intimidated just trying to navigate the website or app. And finally, check what their minimum investment amount is. A lot of platforms these days let you start investing with as little as $1. That's right, you don't need thousands of dollars to get started. Even small amounts can add up over time, especially with the power of compound interest working its magic. Step 4 is all about understanding your risk tolerance. In other words, how comfortable are you with the idea of your investments going up and down in value? Some people are totally cool with riding out those market roller coasters, knowing that higher potential returns usually come with higher risk. Others prefer a smoother ride, even if it means potentially sacrificing some gains. Generally speaking, stocks tend to be riskier, but also offer the possibility of higher returns. Bonds and ETFs, on the other hand, are generally considered more stable, but they might not grow as quickly. The best approach is usually a mix of both, depending on your individual goals, timeline, and risk tolerance. This is where doing your research and maybe even talking to a financial advisor can be super helpful. Remember, there's no right or wrong answer here. It's all about finding what you're comfortable with and what aligns with your overall financial plan. Alright, step 5 is where the rubber meets the road. It's time to start investing. But here's the thing, you don't need to throw down a ton of money right away. In fact, starting small and staying consistent is the name of the game. Remember, even $50 a month can grow into a significant amount over time, thanks to the beauty of compound interest. It's like that saying, the best time to plant a tree was 20 years ago. The second best time is today. The key is to make investing a habit, just like brushing your teeth or paying your bills. And one of the easiest ways to do that is to set up automatic contributions. Most investment platforms make it super easy to automate your investments. You can choose how much you want to invest and how often, whether it's weekly, bi-weekly, or monthly. And just like that, you're investing consistently without even having to think about it. Okay, final step 6. Stay informed, but don't obsess. It's important to stay up to date on what's happening in the market, but you don't need to be glued to your phone, watching every little fluctuation. Remember, investing is a marathon, not a sprint. It's easy to get caught up in the hype and make emotional decisions, especially when the market gets volatile. But trust me, staying calm and focused on your long-term goals is crucial. Think of it like this. Would you sell your house just because your neighbor told you the real estate market might dip next week? Probably not. So don't panic and sell your investments based on short-term market noise either. Instead, focus on what you can control: your savings rate, your investment strategy, and your emotions. Stay the course, ride out the bumps, and let compound interest work its magic over time. And there you have it. 6 simple steps to start investing in 2025. Remember, you don't need to be a financial expert to get started. Just take it one step at a time, stay consistent, and you'll be well on your way to building wealth. If you found this video helpful, smash that like button and share it with a friend who needs to hear this. And don't forget to subscribe to the Real Assets Arcade for more tips on personal finance, real estate, and building a secure financial future. Let's make 2025 your year to grow. Thanks for watching, and I'll catch you in the next video.